Welcome. You are watching episode 63 of Regional Wrap, pre-recorded on Monday, 10th of October for release on Wednesday, the 12th of October. Regional Wrap, providing an insight on the issues affecting regional Australia and giving a voice to regional residents. My name is Bill Bates, and joining me on this episode, is coal a soft target for governments? Is my guest Nick Jorss, Executive Chairman of Bowen Coking Coal. Nick graduated with a degree in civil engineering from the University of Queensland and worked for Balderstone Hornigold, delivering significant infrastructure and resource projects over a period of 8 years. He later obtained a Master's in Business Administration from the University of New South Wales Australian Graduate School of Management and a graduate diploma of Applied Finance and Investment. Nick's investment banking experience included roles as the Director of Pacific Road Corporate Finance and later Non-Executive Director of Vantage Asset Management. Nick was the founding Managing Director and substantial shareholder of Stanmore Coal Limited. He served on Stanmore's board from its formation in 2008 through to 2016 and was instrumental in the success of the company, leading it from a coal explorer to a profitable mid-tier coal producer. In 2018, Nick joined Bowen Coking Coal, a $600 million ASX-listed metallurgy coal exploration and development company. He is also the non-director chairman of Ballymore Resources, which focus on applying modern exploration methods and development techniques on its exciting gold, copper, silver, and other base metal interests. Welcome, Nick. If you could just give us a start on basically your formative years in regards to your career, or even if where you grew up, and that would be interesting as well.
Yeah, no, look, thanks, Bill. I appreciate that, and great to have the opportunity to chat to you and your listeners. Look, I'm a humble civil engineer originally. I guess my dad was a civil engineer, and he, as was his dad, actually, it turns out, all University of Queensland graduates. But Dad sort of took us around the place. So I was actually born in Perth for my sins when he was building a salt mine over there, Dampier Salt. And then we ended up back in Gosford in New South Wales, building a bridge there. And then up in Jakarta for a few years as a kid. But we settled back in Brisbane, which was Dad's hometown. Mum's comes from a dairy farming family in northern New South Wales and Lismore. But yeah, we settled in Brisbane, and that's where I went to school and university. So I did civil engineering, and then after a while, I sort of, I guess fair to say, I got sick of that, and so I did an MBA, and then I started to get in the finance game. That was pretty interesting for a while, and then I stepped out of that and started a couple of mining businesses, Stanmore Coal being one of those. Yeah, that's the background.
Well, leaving the civil engineering, was that to get out of the great outdoors and into air conditioning buildings, or what?
No, it wasn't really. I've just always, I guess I've always enjoyed building things. So, yeah, I've enjoyed building physical structures, and now I enjoy building businesses and coal businesses and resources businesses. But I also think I've got about an 8 or 9 year attention span, Bill, so that's probably coming up to the end of that period. And finance and economics has always interested me. You know, how markets work and how people make returns and all that sort of stuff.
How the money world turns.
Yes, and I guess I started out, as I say, as a humble contractor, or really subcontractor of Balderstone Hornigold on big projects like I spent 3 years in Melbourne on the CityLink, the Balti Bridge, and a lot of other smaller stuff around Queensland and other places. But yeah, it's been an experience.
Well, moving on to the coal industry, do you, as the topic of the episode is coal an easy target for governments now? I mean, do you think a lot of other industries would be easy as to for the governments to pick on as coal is, because it's not the in thing because of carbon emissions and things like that? because this change by the Queensland Government to increase royalty rates, quite hefty as well. It's billed by Cameron Dick as getting the fair share for Queenslanders, but there again we've got our trading partners like Japan considering it a sovereign risk. How do you in the coal industry actually view this sort of cash grab?
Yeah, look, I mean, I guess we see it, and I see it, speak for myself here, as a sort of pretty outrageous cash grab. I mean, your first question, I guess, around, is coal an easy target? Yeah, absolutely. I think it is. It's become that because we've sort of, for various reasons, we've sort of, struggled to prosecute our own case, to sort of put the positive case for coal out there. And we've therefore, I think our social licence has suffered. And government's probably taken advantage of that to impose what's now the highest royalty regime in the world, and by a large margin, at a top rate of 40%. You're talking 2 or 3 times what anybody else is doing in the world. And this is not just the Western world and coal-producing nations, but also Chile and places like this in South America, and other places that frankly are in Africa that are dictatorships. So nobody's contemplated a royalty that takes 40% of your revenue away, except for our government in Queensland. But I think you make a good point, right? Well, one of the issues is that a lot of people are a bit down on the coal industry, and that's probably a good opportunity for governments to stick the boot in. Now, our job and my job in part is to sort of redress that and start to make what I think is a very compelling case for coal, and particularly for Queensland coal, which is 80% of our coal exports by value are coking coal. They go to make steel, and the sort of nonsensical part about all of this is that you can't decarbonise anything without steel, right? You actually can't build the infrastructure you need, not just the wind farms and the solar farms, but also the transmission, distribution, all the storage, all the backup. So, that's the irony of it all for me, Bill.
But the other thing is too, it didn't discriminate between thermal and metallurgy coal, which is quite striking, really, I think. And can you give us an idea of the difference in sort of pricing or sale price per tonne of coking coal versus thermal coal historically and now, roughly?
Yeah, look, it's a good question. I mean, historically, thermal coal is traded at, let's just call it half of coking coal, right? So coking coal is a higher value product. It goes into the steel market. Broadly metallurgical coal, let's call it, which includes what they call PCI and coking coal. So historically, that's probably about the range. Say, about coking coal's traded maybe twice thermal coal. What's happened now, of course, is Europe's in a massive energy crisis because they've taken some very poor policy decisions. They've cut themselves off from reliable source of energy, and in doing that, that's closing their nukes. In Germany, that's also outsourcing all their gas. So they don't do much in the North Sea. They certainly haven't done any fracking in places like the UK or mainland Europe, which they could do, and they're now looking at doing. But they've outsourced that to Vladimir Putin. So he's had sort of the energy supply under his control. And of course, now the war's come and that's created chaos. So what you've got now is you've got thermal coal. Because of that, thermal coal has spiked, right? So at the moment, thermal coal is roughly flipped. It's, call it, give or take. Well, it's probably not twice coking coal, but it's certainly 50% higher than coking coal at the moment. So, thermal coal is still sitting around $400 US, which is an incredible price, like absolute record price. Queensland should be celebrating this because it's bringing in a lot of export dollars. But met coal as well, which, as I say, most of our exports in Queensland, unlike New South Wales, are metallurgical coal. That's still sitting around $270 US. So it's still a fantastic price. But it's a very unusual situation where you've got people, they've transitioned very fast in Europe, and now they're realising they can't heat their homes. Winter's approaching. Winter is coming, as they say, and they're in a lot of strife. So they're just buying all the coal they can provide. I mean, the deputy head of the EU has come out and said, and these are the guys who led the charge on transitioning away from coal and other hydrocarbons into renewables, and he's come out and said we need to burn as much coal as we can for the foreseeable future. And even Greenpeace, I saw a headline yesterday saying they've come out in Germany and said, yep, we accept we've got to burn coal for the moment. So coal demand, I mean, everybody here talks as if it's going away. I mean, this is thermal coal demand now we're talking has gone up like 36% in the last 12 months in Europe. So they are doing whatever they can to keep their lights on and keep their homes heated and their industry going, heading into this, what could be a very difficult winter for them.
I think they've, and the thing is, what from the lessons that are happening in Europe, our government doesn't seem to be breaking step in its way forward, which is somewhat worrying. I mean, Australia's never been great at doing things well in regards to innovation like this. So to think that we're going to somehow do better than Germany or Britain or something like that going forward is a bit worrying. That they're still prepared to run headlong into this.
Yeah, look, I don't disagree, Bill. I think we need to be mindful of what's happening in Europe because they are the canaries in the coal mine, to use a phrase. They have transitioned fast and they've moved away from reliable forms of energy. Germany shut down almost all their nukes. They got 3 left, which they're still kind of playing around with, whether they keep 2 of them on standby till sort of mid next year. Our version of nuclear, we don't have nuclear in Australia, obviously. The crazy part about that, of course, is nuclear has zero carbon emissions. So Germany's electricity price is the highest in the world because they've replaced nuclear with renewables, and secondly, their carbon emissions have gone up. So they've actually not achieved what they were trying to do. Our version of our base load is coal-fired power, and I think, look, no issues. If this transition continues, we just need to be mindful of the fact that A, it's going to be very expensive, B, it's going to be less reliable, and also, there isn't a system to transition to at the moment. That's the issue. People will kind of have a crack at the coal industry or the oil and gas industry, or even uranium in the nuclear industry, and say, we've got to get out of that, which is fine to say, but you need a system. You can't transition to a system that doesn't exist. And until you get storage and firming, in your electricity system, that's going to be the case. We're going to head down the path of Europe. So, the Queensland Government here has just announced $62 billion plan to replace our existing energy system with renewables backed by pumped hydro and some gas. So it's basically spending $62 billion of new money and new capital for which investors and government are going to want to return on for an electricity system that will be less reliable and more expensive. So yeah, that's sort of where we are. And I think, I'm an optimist. I'm a firm believer that common sense will prevail over time. But, I listen to quite a bit of stuff coming out of the US and Europe. There's a crowd called Doomberg that do some fantastic analysis. And, as he says, that head guy there says, more pain required, basically, before people in Europe wake up to themselves.
You touched on the point that the coal industry hasn't prosecuted its case very well. And I put coal industry in the same league as our logging and timber industry. It's been decimated basically by successive governments, through this in the States and the Commonwealth. And I've always found, looking back and even talking to people in the coal industry, they sort of just lived in hope that it wouldn't happen, They didn't prosecute all the good points about the timber industry, the land management it provided. And I find that the same way with coal industry. The coal industry used to have its own sort of peak body, but now that seems to have gone into in the case of Queensland, in the Queensland Resources Council. And really, it's, with all due respect to Mr. McFarlane and the Mining Mineral Council, really, they're not doing their job in regards to batting for coal. I think it's just too big a corner. And I find with all peak bodies, especially those representing activities that are actually in the regions, the fact that they're in Brisbane or Sydney or wherever, they're not doing their job. They need to get out of there and get into the regions where their wealth comes from. But why don't you think the coal industry's prosecuted its case well?
Look, I mean, you know, I still feel I'm a relative upstart newcomer in this, so I don't want to be too critical. But I think you know, it's been run by big companies, and they have multitude of interests, and their investments in lots of different things. It's a difficult case to stand up for. Right? It's not an easy case. It's an easy case to make, but a lot of people, you know, haven't had the gumption to sort of make it because the tide's sort of been seen to flow the other way. So. I mean, I'm particularly proud to be involved in Queensland Coal. I think we've got some of the best mine workers, you know, Queensland coal workers in the world. We absolutely do. We've got the best infrastructure. We've got the best quality coal. You know, we should be seeing this from the rooftops. And I think you're going to see a lot more of that. I mean, there's some stuff that I'm involved in and others that's going to, I think, hopefully start to at least sort of mount the case and put the positives out there. Yeah, I mean, look, the QRC does some great stuff. I know Ian well, and you know, but inevitably, a lot of these bodies, as you say, are trying to kind of deal with multiple issues, and a peak coal body is not there anymore, and so that's something I think we need to have a look at. You know, it's interesting. You mentioned timber industry. I mean, what's happening in Europe now? I come back to the energy crisis, right there. Look, for a long time, they've been cutting down trees in Canada and the US and shipping the wood pellets to power stations in the UK, like Drax, which was a coal-fired power station. They converted most of it into burn wood pellets. And this is just bad policy, right, in that sense. I mean, we need to use the timber for what it's designed for. And not burn it, because it's a lot less energy dense than coal and oil and gas. And certainly nuclear. And that's just, I mean, last time we relied on timber to smelt all our metals and keep us warm was in the 1600s, and we cut down almost every tree in the UK. So that's sort of where that's all heading, to potential environmental disaster. And now you see in Europe, I mean, the Finns and the Estonians, they're all ploughing into their forests, and a lot of the old growth forests are now getting cut down because they don't have enough energy, you know. And it comes down to this one thing: we've demonized reliable forms of energy and hydrocarbons, fossil fuels in particular, before we've had a system that can replace it. And so if you demonize that, you cut supply. They've cut off effectively a finance. It's very hard to finance and insure coal mines these days. If you cut supply, you don't cut demand. We're having the biggest year this year, as the IEA says, International Energy Agency, for coal demand ever on the globe. So demand's going up. Supply's been constrained because of these sort of ESG pressures and the finance market and regulations and governments. Yeah, what's going to happen? One thing's going to happen: the price goes through the roof, and that's exactly what's happened. So there's a lot of suffering going on because of this, and there'll be more suffering, you know, this winter in Europe, and probably in the next winter again, and needless, unnecessary suffering. Really, to be honest, there'll be a lot of people who don't get through the winter, most likely, because of these policies.
Just touching on the timber industry again, I thought one of their poorest pieces of promoting themselves is they never got into the sale of timber or promotion of timber as the sequester of carbon dioxide, which it's the biggest natural form of carbon sequestration. And I mean, to me, it seems to be as simple to show. Go to any old town in Europe, and you can walk into buildings and structures, you know, that are 400 or 500, 600 years old, and there's a beam of timber still supporting the roof or whatever. And so it's sequestered that carbon hundreds of years ago, and it's still locked up. But our timber industry never sold that as part of their overall system. Actually, they didn't sell themselves very well at all.
Yeah, look, I can't disagree, Bill. I guess, you know, we're now sort of trying to develop technologies to extract carbon dioxide out of the air. But we've got some very good ones that have been around for millions of years. And as you say, they're called trees. So look, that is definitely a factor. So look, there's some interesting, you know, some bizarre policy decisions being made now globally. And as I say, the repercussions that are starting to come through. Look, we're not immune here in Queensland and in Australia. And we shouldn't think we are. You know, when we had that recent electricity crisis, and you know, we lost a unit in Callide, some of the New South Wales units are out, because one of the things that happens, of course, is when you own a coal-fired power plant, and the government keeps saying, well, you've got to shut that down in the next few years, or the financiers, you know, in fairness. You know, you don't spend a lot of money to refresh it, give it a birthday, and renew it, and keep it going. So of course some of them went out, and we had some floods in New South Wales, which we had coal shortages, and we had a massive spike in our wholesale electricity prices, right up to kind of German, you know, world leading levels, sort of north of $400 per megawatt hour on average over a period of more than like a couple of months. We probably dodged a bullet. I think my understanding from the system operators is that we were within 2.5 hours of a NEM-wide blackout. So the national electricity market is the entire East Coast, everything from North Queensland through to sort of South Australia. And if that goes out, you're in serious strife. So we were pretty close to losing all our lights. And you lose your lights, you lose your heating, you lose your, you know, unless you've got a diesel backup, you lose your, you know, incubators for newborn babies. You know, this is serious stuff, right? And you know, you lose your ability to communicate in this modern world. So that's pretty scary stuff. And look, that was a dry run, if you like, because, you know, we lost a unit in Callide. We had a couple of units down for maintenance. So, you know, more of that will happen more often as we move forward on this plan, until we have a firm and reliable energy system, dispatchable energy system that backs up the solar and the wind, which we don't have. And this plan, frankly, you know, isn't going to fully provide that. It goes some way, but again, at quite a high cost.
If I could just share a page here. I have some views about coal. I'm more favourable than what most people are. But yeah, really, coal is merely ancient terrestrial vegetation, liberated after millions of years from subterranean tomb to be utilised for the benefit of humanity, while releasing copious amounts of plant food to regenerate our planet. And that's basically a fact. I mean, while we're burning coal and other fossil fuels, we've actually greened the planet over time. And satellite images from about 1986 onward has shown that the planet's not only greened over more densely, but also a bigger spread by about 15%. So there's a good benefit and a selling point for a start. The other thing is, like you said before, basically the start of coal mining in the late 16th century actually saved English and European forests from decimation. I mean, at the time there was, you know, there was things like, they called them royal forests, and that was basically just to protect the trees from people gathering firewood and cutting down trees for that. Plus they needed them for build ships and all those sort of things to defend the country. But overall, coal, together with fossil fuels, have accrued more social credits in their direct and indirect roles, ending backbreaking manual labour and in enabling innovation to advance humanity while increasing life expectancy by 40 years. This is more value than carbon credits will ever make.
Look, you know, you raised some good points there, Bill. I mean, I think you know, it's a matter of your time frame, right? Coal, you call coal biomass if you wanted to. It's you know, it comes from vegetation just over a much longer time frame, and now we're in a situation where we're literally ripping up forests, increasingly so. You know, to replace coal, which just does not make any sense in a climate sense. You know, in any environmental sense, where we're sort of destroying the environment in a misguided attempt to save the planet. So, yeah, look, I think points you raise are relatively sound. I mean, I guess everybody's trying to minimise their footprint on the environment. We're doing the same. You know, I'm doing the same personally. My companies do the same. But there are trade-offs in these things. You know, it's not straightforward. And I guess what's becoming evident now is that you know, what you said there about ending backbreaking labour. I mean, basically, if you look kind of at a long, broad sweep of history, of human history anyway, you know, up until the Industrial Revolution, we relied on, you know, burning wood, and dung and sort of, you know, vegetation to get the little amount of energy we got out that we could use. And I don't want to get too technical, but there's some good work being done on this stuff, right? So if you look at the energy that we had to put in to get that, you know, to tend fields and to like 95% of people worked in agriculture. That was what it was. Now it's, you know, whatever it is, 1%, 2% or 3%, probably 1 or 2. And that freeing up of sort of labour, which has freed up, you know, our women to do other things. It's freed up, you know, people of all descriptions to do, you know, much more interesting things, I guess, rather than going around kind of gathering wood and tending fields. That's come about because of this sort of energy density, right? We've gone up to higher forms of energy. So we've gone from wood chips or wood to coal, and then oil and gas, and then in some cases nuclear, right? And it's that excess energy that's allowed us to do everything we've done in society, be that, you know, art galleries and you know, music halls and computers and everything else. We use that excess energy. So now we're sort of on a path to say, well, we want to, at least in part, kind of go back to biomass and other things. I've got no problem with biomass where it's a waste product, you know, it's for gas or something out of a sugar mill, but I have a big problem cutting down trees that otherwise should be there, as you say, sequestering carbon dioxide and being part of our natural environment. So, yeah, there's and the other issue around it is energy density. As I say, you know, you've got the fact that you know, wood has about half the energy density of coal, roughly, but a forest has a fraction of the energy density of a coal mine, because in a coal mine all your coal sits in one spot, whereas in a forest all the trees are sort of spread out. And then you know, if you go renewables, they're much lower energy density again. And so what happens is you end up disturbing a lot more ground, which impacts a lot more people. So you end up with windmills, wind farms and solar panels over much bigger areas of ground, and that impacts your social license. You're seeing that, like you're seeing some of the wind farms up in Cairns where people are upset about those. You're seeing it in California, you're seeing it all over the world, in Europe. These things just have a massive footprint. So, you know, should we continue doing it? Well, that's a good question, but I mean, I guess we need to be cognizant of the fact that this has downsides as well as upsides. We need to make sensible sort of adult-based decisions on these things.
If we just move over to Bowen coking coal, I've got a map there of your deposits. Can you just tell us something in regards to deposits of coking coal versus thermal coal? Are they sort of intermixed, or can you better easily define areas where there's metallurgy or coking coal and thermal from where there's thermal coal? So I'll just bring up your map.
Yeah, sure. That's a good question. I mean, look, we have a primary focus on metallurgical coal, but we can also create coking coal. It's a slightly old map you got there, Bill, but I can talk to it all the same. That's okay.
Come from your website.
Yeah, is it? Geez, well, I better talk to our IT guys. Look, in terms of your question,
this run from the Bowen Basin and down to the Surat, or is this just in the Bowen?
This is all Bowen Basin, so we're all Bowen Basin. So the Bowen Basin is one of the best coke and coal basins, probably the best coke and coal basin in the world. It tends to have a higher rack, so the coal's been sort of, and I'm not a geologist, but let's say it's been underground and cooked under pressure for longer, which gives it, swell, vitrinite, other things that you need, coking properties, fluidity. But it also comes with some thermal coal, so we'll produce some thermal byproduct. And there are some mines in the Bowen Basin that are pure thermal mines. But in a sort of a material sense, most of that coal in the Bowen Basin is very high quality coking coal. There are other basins where they're a bit younger, like the Surat, where they don't, and the Galilee, where they don't have the same time frame and particular geological conditions, and they haven't produced the coking coal. So the reason coking coal is probably a lot more valuable than thermal coal is that it's just scarcer, right? It's harder to find. Thermal coal is a much bigger market globally, but coking coal, finding good coking coal is hard to do. In terms of our assets, we've gone and bought some from New Hope. We bought the Burton mine, which sits up not far from Moranbah. We're switching that on at the moment. We also picked up another deposit nearby called Broadmeadow East. We're mining that as we speak. We've got coal spitting out of that. That'll go out of Dalrymple Bay Coal Terminal at Mackay. We've got another couple of projects up in that part of the world, one called Hillalong that we're just proving up. We're drilling that up and that's looking really good. We've got Isaac River, which is another metallurgical coal project. It's next to Daunia, the big BHP Mitsubishi mine. Fantastic high quality coking coal. And then down the south of the basin, near Blackwater, we've got the Bluff project, which is the first one we've switched on. So we've got, that's producing PCI coal, which is a form of metallurgical coal for the steel market. And that's going out of Gladstone. We've done our first 2 ships there, and we'll have our 3rd one out shortly. And both of those first projects, Broadmeadow East and Bluff, are moving up towards steady state. We'll be there, by the end of the year. And then we'll switch on the main Burton mine. We're refurbing all the infrastructure, so we're spending a lot of money in central Queensland at the moment to get that wash plant, rail loop, offices, all that refurbished, because it hasn't been used for a few years. But there's a lot of latent value in that for us, and that'll give us control of our own destiny to export our own coal, wash our own coal, and get it out to port. So yeah, look, we've got a really exciting growth path for Bowen. It's a great place to be in the Bowen Basin. We're very proud of it, and we're supportive of the Bowen Basin's continued existence and growth.
Now that we're supposedly post-COVID, what's the shipping arrangements like? I mean, we used to see pictures of all these coal carriers off Newcastle waiting to be loaded and things like that. Is there any problem with your timescales with shipping your coal, or is it fairly seamless?
No, look, it's pretty good at the moment. I mean, we saw shipping rates go up sort of markedly in recent times, but they've come off a fair bit recently, and ships are available generally. So, I mean, there are always kind of improvements to be made to the infrastructure. We're probably a bit short rail at the moment as an industry, as a basin. But the infrastructure is not too bad, and certainly the shipping is looking pretty good, and the customers are just desperate to get the stuff, to be honest, in Asia and in Europe and elsewhere.
One of the big things we want to talk about now is the royalties, of course. But being from the regions, although I was born in Perth as well, and made me way up here over the years, but I did 24 years in the armed services and that. But one of the gripes is getting our fair share. I mean, it's all well and good. I mean, you've got mines up in central Queensland that's making money and going to create a lot of wealth. But a lot of the people who work in those mines and people like yourself live in Brisbane, and you spend all your ill-gotten gains down there, and we don't benefit. So that's a continual gripe sort of thing. And one of the comments that Mr. Dick made was, in regards to pushing this wheelbarrow for the increase in royalties, that regional Queensland has got to get some sort of cut. Well, as far as I know, regional Queensland has never got some sort of cut from royalties or anything else. It just, went begging in regards to, give us some money, when you can, sort of thing. There's been no program. Although I think in West Australia there was a sort of royalties for the region and those sort of things, and it's been talked about in that. So I don't think the regions are going to see a lot of this money that's sort of going to come in from this extra grab. I think it's going to be desperately needed for things like the Cross River Rail in Brisbane, and also with the Olympic Games coming up. I'm sure a lot is going to be spent down there. So I just want to chuck up a grab of the royalties over the past few years. This is the royalties, and we can see the estimated from last year, but they really haven't got into what they're going to generate next year with this grab. But it's pretty hefty anyway. But I think in the first few months of the extra taxation or extra windfall royalties thing, they've already got probably in the first 3 or 4 months more than they expected in a year. Is that your take on it, that they've really underestimated how much they're really going to take out of the system?
Yeah, and I think, look, as long as coal prices stay up, those charts, those forecasts you got there will be nonsensical by the government, because I mean, my understanding is, well, the figures I've seen, they wanted 1.2 billion in additional royalties over the forward estimates, call it the next 4 years. Well, it is the next 4 years, and they ended up with that in the first 2 months. So minor miscalculation in the forecasts. So absolutely, they're ripping a lot more out of the industry and out of the regions. I mean, where that goes, I guess they had said, they're having trouble funding some of the hospitals. Probably the health system in the regions is in disarray, as it is in Queensland, as it is in Brisbane, I should say. They wanted to build a couple of additional hospitals and upgrade a few. I guess they're having trouble sort of balancing the books to do that. I think what's become clear now is that some of it will be going back into the regions, but it'll be windmills and wind farms and,
nothing
and
useful.
solar panels on in your farm. So, but look, I couldn't agree more, Bill. One of my real points of passion is that a lot of this money should be going back into the regions, and it pains me that you drive around there and roads aren't, fantastic and all the rest of it. So yeah, I think that's something that's an opportunity. It's an opportunity for whichever side of government wants to take it. I think the mining industry does a lot. I mean, in Queensland, we're 1 in 6 jobs in Queensland. That includes Southeast Queensland, by the way, because there's a lot of sort of services and engineering and all that sort of stuff down here. But it's 1 in 5, according to QRC figures, it's 1 in $5 in the economy. So it really is the engine room of the state. And the mining industry, I think, and the coal industry, is willing to do more. It pays its fair share, but willing to do more. It's already doing, as you say, 7 or 8 billion. Historically, it's going to do a lot more than that going forward with these new rates and prices up. But let's not just get it disappearing into a black hole in Jorss Street in Brisbane. Let's have a program that actually creates a fund that allows us to update and build infrastructure in the regions and in Southeast Queensland, frankly. I mean, across Queensland. So, look, I'm a big fan of that, big proponent of that, and I tell that to anybody who'll listen in the political sphere. But let's see how we go. I mean, I think the danger in this stuff is that it all just disappears in consolidated revenue and gets kind of spat out, in kind of recurring expenses, shall we say.
I think most of it will probably go in electioneering and promises and things like that, trying to get back into government, and not actually deliver anything that is wealth creating for the future, which is an ongoing problem with all governments. They tend to sort of, because they're only short term, they only think short term, and they don't really think of wealth of growth to give ongoing wealth creation. So that is a continuing problem.
Yeah, no, look, I agree with you.
If we just touch on the actual rate now, and in regards to how much they're taking.
Yeah, so
This is the schedule now, and basically, when the prices get over $300, they take 40% of everything after $300, and that's a huge amount. That's like being like the Venezuelan government trying to get rid of the private enterprise.
yeah, I mean, I've on the record, and been in the press sort of talking over this quite a bit. I mean, it is the highest royalty rate in the world, bar none. I think the next one is down at about 15, maybe percent, something like that. It's a huge tax grab out of an industry. Yeah, and look, as I say, I mean, I think mining's a bit like farming, really. It's you have your good years, you have your lean years, and you need those good years to pay for your for your lean years, put some money away, and secondly to pay for your capital. If you need to upgrade things or build a new mine. And so what this does is just take away a lot of that, a lot of that return for investors. So if you're paying up to 40% of your revenue, before you get a cent, you've obviously got your costs you've got to pay as well, which are pretty significant, getting higher at the moment. And then any money you do make, you give 30% to the federal government, and then there's payroll tax and everything else. It does make the whole industry more difficult. The existing mines will continue to operate. My concern is, where will the new mines be? And you've already had BHP come out and say, well, they're cancelling South Blackwater, not spending any more on that. And look, it's not just coal, that's the issue, right? I mean, everybody thinks, coal's an easy target, we'll have a crack at it. But the Japanese ambassador came out a couple of times now and has said, look, we funded your coal industry, we really helped with that, and they did. They spent billions of dollars building all this infrastructure with us as partners, but don't expect us to be there for the next thing you want to do, which is, government wants to do renewables. Obviously, they want to do kind of critical transition minerals. They've got plans on hydrogen, which I don't think stack up, green hydrogen, but let's just say, where are they going to find the funds for that? So it's the next jobs that I'm concerned about, as well as today's jobs. And if there's no capital, because investors don't see Queensland as a safe place to invest, then there's no projects. If there's no projects, there's no jobs. So it's pretty simple.
The other thing is too, there's a lot of super funds and people's super invested in different companies and that. So, all right, the Queensland government's got to get a grab and a bit more share, but although it's taken capital off companies, but it's also taking off money off the shareholders, and a lot of those shareholders could actually be in there through super funds. And that's a little bit disingenuous of the government not to consider that.
Yes, yeah. Look, that's right, but it also it impacts on Queensland's investment destination. It's not good policy. It's a tax grab. As I say, highest rate in the world. It would make a South American dictator blush, really. They're nowhere near this.
I also think most people expect the governments to do some tough bargaining when projects start up to make sure we get a fair amount back for what's under our ground. But that, like I say, that should be a tough negotiation if as necessary to get the project started. And there shouldn't be, after that, there shouldn't be much in the way of altering it.
Well, there was no
and like you say, it creates sovereign risk.
Yeah, it creates sovereign risk, and there was no consultation here at all from Treasury and from the Treasurer. So it was deeply disappointing. I think it's bad for Queensland. It's bad for the region. It's bad for jobs. And you know, as I said, I'm an optimist, so I'm hopeful that either the government will see sense, or one way or the other will get sorted out, and we'll get something that's more reasonable on a permanent basis. Because my point is, the government can do what they want to do. You know, well, up until recently, they were spending 62 billion on renewables, but let's just say prior to that, you know, they can fix the budget to a large extent. They can build hospitals they need to build, all courtesy of the resources, the mining industry, the coal industry. Without putting a permanent handbrake on future jobs by imposing the highest tax regime in the world.
It would also help if they didn't subsidise other industries to the tune that they do. That might be another thing.
That's right.
Put everyone on a even playing field.
Yeah, that's right. And that's the thing with renewables. I mean, they all look good. Everybody loves them, but at the end of the day, if they were the cheapest form of energy, which they're not, by the time you back them up, firm them, and you have transmission to bring them to where you need the power, they're a long shot more expensive. Yeah, I mean that's the issue, to be honest, Bill. But I'm going to have to disappear pretty soon.
Yeah.
Sorry, I'm happy to try and regroup if you can.
No worries. Look, we'll just wind up here, but I'll let you finish off on a note in regards to Bowen coking coal and its future, and the coal industry in general. What you hope for it?
Yep. No, look, thanks, Bill. Look, Bowen's got a strong future. We're a growing company. We're a young company. A lot of the big companies are looking to exit out of the Bowen Basin for their own reasons, mainly driven by shareholder investor pressure, ESG pressure. We're big fans of the coal industry in Queensland. Big fans of met coal, and also think thermal coal is going to play a critical role for quite a number of years. So, yeah, we're happy to do what we can to continue to grow the business. We're proud of being part of the coal industry in Queensland, and I think that's what we need to try and change the conversation around here. Is that all our coal workers should be proud of what they do. They're creating a good. Without them, we wouldn't have the steel, high quality steel that we need to build everything that we do, from the Olympics through to the renewables, through to just general industry and growth. So, yeah, I'm a proud Queenslander. It pains me to see things like these royalties get introduced, because I don't think they're good policy. I don't think they're good for the state. But yeah, we're kind of pushing on and keen to build this into quite a big business.
Okay, Nick, we'll leave it there. Thanks very much. I hope I get a chance to talk to you very soon on a few different points in regards to the promotion of the coal industry going forward.
Sounds good. All right. Thanks, Bill. Appreciate that.
Right. Thanks very much, Nick.
Yeah,
have a good day.
Bye-bye.